Florida real estate market faces temporary disruptions but rebounds strongly after hurricanes. When hurricanes hit Florida, the real estate market often experiences a mix of short-term disruptions and long-term shifts. Here's what typically happens. 1. Short-term market disruptions. Delays in transactions. In the immediate aftermath of a hurricane, real estate transactions tend to slow down as inspections, appraisals, and closings are delayed. Many buyers and sellers may postpone their decisions until the storm damage is fully assessed. Increased insurance claims. Property owners file claims for hurricane-related damage, and insurers often require repairs before completing sales. A temporary drop in demand. Some potential buyers may be hesitant to purchase in hurricane-affected areas due to the risks of future storms. This can lead to a short-term dip in demand. 2. Price fluctuations. Decreased property values in affected areas. Homes that sustain significant damage may see reduced property values. Buyers may negotiate lower prices due to repairs and the perceived risk of future hurricanes. An increase in repair and construction costs. After a hurricane, labor and materials for repairs become scarce, leading to higher costs for rebuilding. This can cause home prices to rise in areas where repairs or new construction are needed. Higher demand for non-damaged homes. If some homes in an area remain largely unaffected by the storm, demand for those properties can increase, driving up prices. 3. Long-term market effects. Rebuilding booms. After the initial disruption, many hurricane-hit areas experience a boom in reconstruction. This often includes an increase in new home construction, which can stabilize or even raise property values over time. And stricter building codes. Post-hurricane rebuilding often leads to stricter building codes, which may make homes more expensive but safer and more resilient to future storms. Yet, insurance costs. Higher insurance premiums become a long-term consideration as hurricane risk leads to increased rates, impacting affordability for homeowners. 4. Migration and demand shifts. Population shifts. Some residents may choose to move away from hurricane-prone areas, especially if they've experienced repeated damage. This can reduce demand in certain areas, but also increase demand in safer inland locations or areas perceived as less hurricane vulnerable. G. Resilient markets. Despite hurricanes, Florida's real estate market has historically bounced back relatively quickly, with continued demand driven by its climate, no state income tax, and overall desirability as a place to live and retire. So, while the market may experience a temporary downturn after a hurricane, it often stabilizes or grows stronger as rebuilding efforts and new developments take place.